Steve Leisman and Rick Santelli are here for what we should get on time, and that is the CPI. Rick, you got it? Or Steve?
Up 0.4% versus an estimate of 0.3%. Real earnings minus 0.1%. Obviously, the inflation number's taking that off. Let's see what we got here. Year over year, headline 2.9%, right in line. Ex-food and energy 3.1%, right in line. No adjustment to the prior number. But the one thing is the headline. The core at 0.3 is exactly in line with estimates. Let's see what else we have here. Unadjusted. That's all I have right now, Joe. Food was up 0.5%, so some pressure there. Food 0.4%. Owner's equivalent rent 0.4. A little bit of pressure right there. I don't have the actual table yet, but I'll get that in a second. Taking a look, see if the bond market is reacting at all. That's what Rick would be telling us, but he's going to be here in a second. I still have the 2-year at 351. Rick, do you remember where it was going in? I can't remember. 10-year at 4.01. So that's actually down a bit on this number. Yeah, pretty big decline. I think markets seeing essentially, Joe, this inflation numbers in line with expectations. Okay. The key here, and I'll dig into the numbers, I expect to find tariff inflation in there. The key all along, the main risk to all of this was it going to spread to other things? That does not appear to be the case. That was the risk that held the Fed back. We can argue, did it make sense for the Fed to guard against that kind of risk?
Is this a big moment, Rick? Is that
263,000? Is that what I'm seeing on initial jobless claims?
I didn't see that, Rick.
Yeah, 263,000. That is the news of the morning. We haven't been above 250,000 since October of 24. So 260,000, where's that going to comp to? It equals where we were in June of 23. To find a higher number, you're back to October of 21. To me, that's the biggie. We're talking about, is the Fed fund futures market going to potentially price in 50? That is your catalyst to actually get there.
To price in 50. Where's the 10-year, Steve? I was thinking we might get a 3 handle.
10-year coming up. 4. That's what the market's reacting to.
Exactly 4.
Not the inflation number.
Exactly 4.
We're waiting for that under 4 number. Your buddies in Chicago,
yeah, listen,
who have the calls on that part, right?
On the 4th of what was it, April, when we had our 3.99 yield close, the low close for the year for 10s in Chicago, everybody was betting that we were going to spend a lot more time under 4%. I took the other side of that. I think debt and deficits matter. I think the yield curves matters. So I still say, even if we close, and it's based on a close, and a weekly close is your highest priority from a technical perspective. And once we get that, I think if I was a trader, I'd probably still end up fading it. I think if the Fed cuts 50, the yield curve steepens 25. I still think 10s are going to be there, and they're going to be stubborn. It makes me upset when I see everybody talking about 30-year bonds. 30-year bonds haven't been the biggie in over 20 years. And just because the UK and the Japanese, they trade those things by appointment, it gets distorted. Arbitrage keeps it in line. But you want to watch the 30s versus 10s spread, 5s versus 10s, the fight, the knob, because the steeper these get historically, the more that tells me that the premium in between these maturities is going to keep getting wider and wider.
Rick, I want to just cut you off for a second because I want everybody to take a bit of a chill pill here on this jobless claims number. I'm trying to run it down. There was a spike of 15,000 in Texas, and I don't know why that is. It could have been some kind of special sort of thing it could have been in local education or something like that. But if you back that out, it looks a little less drastic.
Traders don't like backing anything out of the garage. They look at everything in there, whether you have jalopies or limousines. It is what it is. These numbers have never been accurate. And I think that they're going to pay a lot more attention.
That's what I was going to ask. These numbers, the revisions that we've seen, how much attention do you pay to this the first go-around?
Our Treasury Secretary really kind of nailed it, and it made me a little nervous because basically he said it's not about maybe tweaking how we do the numbers. It's now becoming a case for how do we need to reform the Fed, and his logic is almost very hard to refute. If they're data dependent and the data is horrible, then maybe we do owe the markets more of a cut. I'm still an inflation hawk, but to see these numbers, especially on the producer side with no pass-through, I think a 50 is almost called for. And believe me, I'm not in the camp. Listen, I'm not going to be auditioning to be Fed chief, okay? So I'm not going to tell people, yeah, if Fed needs to cut. I think with record prices and equities, I agreed with most of Jay Powell's logic, but I think things have changed dramatically. And that 911,000 revision, more than half of those jobs taken away, that really does change.
Did last month, was it CPI first, then PPI? This month, was it PPI, then CPI? So it was like that.
Yes.
So last month, PPI was great. CPI scared the hell out of everyone. This month, PPI was great, and CPI was in line.
CPI is okay, yeah.
I want to know what Lloyd Blank
I just want to take the other side of Rick's trade here real quickly, which is...
You're sitting next to each other. Do not get into one of those. Actually, maybe I'd be good.
Why not?
Whatever's best for ratings.
Well, I just don't want any fisticuffs.
Why not?
Okay, I do want
ratings.
You're right. Okay, go.
Very quickly before Lloyd, you have a GDP running at a tracking forecast of north of 3%. You have the stock market near all-time highs.
At all-time highs.
Or at all-time highs, at or near. I get that the Fed can come down because it's restrictive, and there is not necessarily a reason to remain restrictive. There we go, a big bump, by the way, in the probability of the second cut, more confidence in the third cut this year. Wow. And I'm good with that. The question becomes, how far down should it go? How far from neutral is the Fed? It's because there's a huge debate.
Who the heck knows what neutral is?
Let me finish, Rick. There's a huge debate about what the right break-even rate is for this job market, given what's happened to immigration. We may be very close to that number.